Well, here I'm in Cape Town, and just to give you a little bit of context for this video, I'm doing this just for you. And I'm in this place, which is on a very busy road. We're visiting some friends. You can see the mountains behind me. But I've got my computer set up, and let's have a look at the charts and see what's going on. It's been a pretty exciting day, and let's see what's going on. Well, hi traders, a very quick update, and really, once again, this is sort of designated for my members, but I'm going to put it on YouTube because I'm going to once again cover natural gas, and I know a lot of people are interested in that. But I'm just going to quickly summarize what's happened over the last, actually just the last couple of hours. And once again, please forgive the echoey nature of this video because I'm still on holiday in this echoey room. I will be back in my office on Sunday though, and normal audio quality will resume. I'm not going to go into all the news and fundamental details like interest rate hikes, 25 points in the US and the same in the UK, massive inflation numbers coming out of Britain, still ongoing saga with the banks and Janet Yellen and what was said in the Fed meeting, conflicting ideas, all sorts of chaos going on, and general chaos in the marketplace, as is to be expected in moments when we have very high inflation, economic downturn, we have banks collapsing, and we have uncertainty about Fed interest rate hikes, whether they're going to continue or pivot or whatever. We don't know what's going to happen, and the best we can do is look at our charts, and that's why we use them. So in the last couple of hours, the dollar index has just picked itself up off these lows and rallied up beautifully. We had a few heart-stopping moments, really, when we collapsed down through this initial support at 103 and then 102.50. We've just bounced off this area just above 101.35. This red line, which is a really important line, actually, because despite that little, what I referred to as a nipple dip below there a while back, a number of days or weeks ago now, it's a pretty important support line. Going back all the way into May 2022, we could go even further back than that to this time here where we had this big spike up and down through that level in 2020. So we've bounced off this area just in time, and along with that, we've also seen a collapse in the euro and the pound and so on. So we've been shorting the euro and the pound and the euro CAD and the pound CAD all the way up, and getting stopped out a couple of times, being saved, luckily, trades on S&P and NASDAQ, which have been fantastically profitable, but we have been stopped out a few times on euro and pound and so on. But today we've made back hundreds and hundreds of pips on these currency pairs. We're now out of the market. For those of you who are not in the ArcisFX community, we were short all of these, and we've been short NASDAQ and short S&P, and we're also short Bitcoin and a couple of other things. We'll look at that shortly. So we're out of the trades for now. I don't know what's going to happen on the weekend, what sort of murmurings and nonsense will come out, and news of banks and various things that are going to come out over the weekend, potentially, as they often do in moments of turmoil. The lawmakers and the public voices for these institutions and the government and so on often do surprise announcements over the weekends and catch the market napping. And that could happen this weekend, who knows. But having had a look at the dollar index, let's have a look at what's happening on NASDAQ and S&P. And our idea on S&P for the last 3 days has been to sell against this rising trend line and this conglomeration of moving averages. There's the 50, there's the 100, and this blue one is actually the 200, which we've now just dipped below. And our plan overall has been to sell into rallies, and for 3 days in a row now we've made fantastic profits selling on rallies into this level. And in fact, 4 days ago we bought at the bottom and made money on the way up. So it's been really good for us, the S&P. Technically it's behaved rather well. It's been a rather obedient pair. Whether this is going to carry on moving down or not, I don't know. It's Friday. Could it be free fall Friday, or will it be, as they say in certain circles, to the moon Friday? Who knows? But I think we've got to carry on with the momentum, and we've got this good technical setup on S&P. I'm not 100% sure about NASDAQ, but S&P, at least for now, looks like we might have a bearish day. And if we do get this free fall Friday, and those of you who know me from Trader TV Live will know that I picked this term up from one of your very good traders there, Prad, I think it was, who called it Free Fall Friday. This is for you, bears and bulls. If it is a Free Fall Friday, we'll probably get down to, I don't know, 38.10, maybe even lower. 37.80 is a very key number, 37.80, which has been a key figure many times, and we can draw a horizontal line at 37.80. Let's just chuck one in there. That's around about here. That's been a key number in this market for some time. The other thing we could do is just put a Fibonacci from the bottom to the top in, and you'll see that this low up to the high over here forms a beautiful 61.8% retracement on the fibs down to this 37.80, 37.65 to 37.80. That's a really key number. If we could get down there today, it would mean a 5% drop in the S&P on a Friday. Is it likely? Probably not. Is it possible? Yeah, it's very possible. And we're also approaching the end of the month, so it's a possibility. There would have to be a big Friday down. It happens from time to time. If you have a look at some of the big candles to the left-hand side here, some of these, not all of them, but some of them, many of them have occurred on a Friday. These big drops down, end of the week, end of the month almost, and bearish market rejecting off serious technical resistance and overall bearish feeling about what's going on in the markets with banks and general sentiment. And I believe a lot of funds and major players, banks and hedge funds and so on, are actually pretty short on this market. Maybe too short. I don't know. We'll see how things pan out today. NASDAQ is not as clear, but what's interesting about NASDAQ is that we've formed this double top, and we had 2 days ago, we had an engulfing candle, not quite engulfing, but pretty close to it, with a spike high. Yesterday, we had a rally up, another spike high, and forming a tweezer top, not quite perfect, but something like that. Tweezer top against 12,900. Same as this high going back into February. It's looking like a beautiful double top, and we're just beginning to move lower in pre-market now. So I would go with the short side for NASDAQ as well. As long as we're below 12,940 or 50, I think we should see a move down into these moving averages, potentially down to 12,000, back to that good old 12,000 number. First of all, we got to get through 12,400, then down to 12,000, and then down to 11,800, another one of those good old favorites that we've been trading off for a long time. And it's also where the 100-day moving average is. A couple of things here that I picked up, and I'm not going to go into them. If I was shorting individual stocks, I generally don't trade individual stocks. Have a look at NVIDIA and AMD. Have a look at the technicals on here. These look really interesting for short positions. And I have to shamelessly admit that I picked this up from someone else. But having had a look at it, I think it looks really good. We're really overbought. We've moved up dramatically since, I don't know, the beginning of the year. For example, on NVIDIA, we've moved up from $140 to $270 in just 3 months. Ridiculous rally, and I think we've got potential for a good short if you're trading individual stocks today. There are a number of lines you can draw on this chart, trend lines and channel lines and Fibonacci lines and so on, which I'm not going to do now for sake of brevity. And then the other one is AMD, the chip stocks. And there are a couple of reasons for the idea of selling chip stocks, which you can research yourselves. But again, we've got AMD right up against. These charts, unfortunately, don't go back far enough. But if you get some decent charts up on AMD and NVIDIA, you'll see, and draw some horizontal lines and trend lines and channel lines and that sort of thing, and you'll see why this might be a good place to sell AMD. Look at the spike high candle, this gap high spike. This was yesterday. Beautiful reversal candle followed by a kind of an inside sort of evening star candle on AMD. I really like that for a short. Might even have a go at AMD today. I don't generally trade individual stocks, but it's worth a go. Just talking about candle patterns on NVIDIA, same sort of candle pattern. Spike high, beautiful reversal candle right there, followed by this evening star. Great for a short. This is a classic reversal candle pattern against a very technical resistance level. And in general, chip stocks going into a recession are generally the stocks that you probably want to sell. All right, so that's all of that. We've talked about currencies. We're already out of that we were short euro, pound, etc., long the dollar against everything, except for on dollar yen. And the yen pairs in general, all short. And we've been short euro yen. We took an excellent profit on that, short from up here somewhere at around 141.50, I think, 141.40. And we're now down at 139.40. So 200 pips we took there. We haven't been trading these other ones just yet. We were waiting for rallies back up into these resistance levels, which didn't occur on the other pairs. It did occur on euro yen, gave us the opportunity to get in short. And we have now closed that trade at support where we are at the moment. Perhaps we'll get a little bit of a bounce here today. If you want to sell any of these pairs, I think dollar yen and euro yen are the pairs to look at, but not just yet, not today, not before the weekend. Wait for a bounce up into some of these resistance areas. And we might just get another chance, one more chance to sell euro yen up into this area. You can have a look at the numbers on this video if you pause it. And then dollar yen, same sort of thing. We might just get another opportunity to sell up at least into this 50-day moving average around 132.50 and maybe even up into 134, 135. I don't know. We'll have to see how that goes. But we're out of the market in currencies for now. Gold, I don't want to talk about gold. Generally, I think we're going to probe up higher. I don't have a position on gold. It's too high to buy. And the danger of a massive spike up through the 2000 level is all too present, and it's possible we could get up to 2050, 2060 before another pullback down to perhaps the top of this channel line. I don't know. But right now we're at this key level that we need to break through around about 2000, and either we're going to surge up through there, smash into 2050, 2060, 2070 before a retracement. We're going to fall back from here down towards the trend line. I don't know which one is going to happen. Who knows? So it's not worth trading gold right now. All right, over to my commodities charts, which include Bitcoin. It's the funny little quirk of the way I've got my chart set up. I've got all these commodities and then Bitcoin. So let's just finish off everything else apart from natural gas. Let's talk about Bitcoin. Bitcoin, I'm short Bitcoin. And we've rallied up into this resistance level. It's a really key level. I've drawn it in pink because pink spells danger for some men and some women, I suppose. I think I should repeat that. I'm going to delete that, or perhaps I won't delete it. I've drawn it in pink because I like the color pink. It's a serious resistance level. It's been support on 3 occasions going back into 2021, and 2022. And right now we're up into the same level. We've broken through that channel line top. It's a bit of an iffy channel, but it's there. And I think we could pull back down towards the top side of this channel perhaps today. And if we break through this channel heading downwards, we've got a good chance for Bitcoin to start moving down into lower levels once the market starts to take risk off, and particularly if the dollar rallies and the stock market begins to fall. People start to move into less risky assets such as gold, perhaps, and bonds, and even cash. It is funny, though, that Bitcoin is considered by some to be a sort of a haven. I'm not sure that's a view that's held by the market in general, though. Overall. Now, let's have a look at gas. Well, there's not a lot to say about natural gas, except that I have not changed my positions. I'm short from $2.95 and I'm long from $2.10, and it's a hedged position, equally hedged, meaning my size of this position short is the same as this position long. So no matter which way the market moves at the moment, it won't make any difference to my profit because I'm in profit from both sides. But what I'm watching for is to see where this moves next. Now, we haven't moved anywhere very much in the last 1, 2, 3, 4, 5 days, except for just drifting lower. For those of you who are bullish, be careful. We're now holding beneath this line at $2.20. That's the key line that I've had in there for a long time. Please, if you haven't been following me on natural gas, go back and have a look at least the last 2 videos, so you can see the context within which I say all of this. It's really important. This is not a video in isolation by itself, but there is a context to what I'm saying. We could move down to $2. We could move down to $1.80. We could move below $1.80. For now, we don't have any indication that the market is ready to move higher. Overall, I feel that this market will move up to $3.50, 60 or 70. That's this other pink area up here, which is where I think there is still a significant amount of long positions being held. And I think that's also a natural target once we get a rebound from these lows after having this massive move down. We need to have some correction. We need to have some, perhaps a short squeeze, and I think that will take us up to $3.60, 50, 60, 70, somewhere around there. But for now, there's no indication that that's about to take place. So my strategy is I want to be buying natural gas when 2 conditions are met. Either we're going to move down lower, down to $2, $1.80, perhaps below $1.80, down to maybe $1.50. I'm not going to be buying any natural gas until I see a convincing reversal of those levels. I know what the levels are above and below us. We've got $2.65, we've got $2.35 or 38, call it $2.40. We've got $2.20, we've got $2, well, $1.96 or 7 actually, but let's call it $2. Then we've got $1.80 below us. I've got a line drawn in there already. And once again, if you want the context for this video, go back and have a look at the last perhaps 2 videos. And then below $1.80, we've got $1.50. If we move lower into those levels, I will not be buying natural gas until we see a break back above any of those levels and a hold and a back test. In other words, a break back above the level, a fall back down to the top of the level as a retest or a back test, and a hold either on the 4-hourly or daily charts. Until any of that happens, I'm simply going to be holding my hedge, which is not going to be affected by any movement in the price up or down. My profit is already locked in. If we manage to break up above $2.20 or $2.36, and so on as we move up through these levels and hold above them, back test them from above, and then move up, I will consider then adding on long positions onto my hedge or removing some of the short positions. I haven't decided yet which way I'm going to play it, whether I'm going to take off positions or add on positions. I would generally prefer to add on positions because it allows me more flexibility for when I want to adjust the hedge. If I've got more positions, I've got more room for maneuvering about and taking off bits and pieces left, right, and center. If I've got fewer positions, I have less maneuverability. So those are the conditions. It's really as simple as that. I want to see either a breakdown below levels below us, and then a break back above, a back test from the top, and a hold, and then I'll consider adjusting my hedge. Or if we move higher, it's the same strategy. I want to see a break up through the resistance, back test from above, and then a continuation of the move up. And I can adjust my hedge every time we reach a new level above us, and we know what the levels are. They're drawn on the chart here. Go and make a note of them. And every time we move up above those levels, I can play the same strategy and adjust my hedge accordingly. And once I get back to my office this weekend and next week, I can do a more detailed and more focused video once I've got all my charts and my non-echo private room, trading room at my disposal. So that's natural gas. I hope that makes. So in a nutshell, what I'm trying to say is we do not have any indication that this market is ready to move higher or lower at this stage. We're moving sideways, but we're just drifting slightly lower all the time, and there is no strength showing in this market just yet. Now, it might be with the slow drift downwards that we get a sudden short squeeze. Because of the nature of this drift downwards, that is quite possible. When you get a non-convincing move, just a drift lower, ambling down without any real conviction, often that's the time when the market is expecting at the least that we could get a sudden short squeeze. And don't be surprised if we get a squeeze of maybe 5, 10, 15%, like we have had on several occasions. Going back to the left-hand side here, at the end of February, about a month ago, we saw that sort of thing happening with 2 or 3 gaps in a row on the way up. We might see a weekend gap this weekend. Anything's possible. But as I said in my tweet, don't be rushed by natural gas. It's the sort of instrument that likes to rush you. I used the silly analogy of the Springbok rugby playing rush defense, which has now been thwarted because teams know about it. But the defense would rush up against the attacking opposition and put them off their game and disrupt the flow of their attack. We don't want natural gas to act like a rush defense on us or a rush attack or anything rushing, actually. We want to be able to trade this peacefully and calmly, know where the levels are, and trade it with calmness and relaxation. Perhaps put a bit of Vivaldi's Four Seasons on in the background while you're trading natural gas if you need to be calmed down. It's that sort of commodity which can put you into a tiz and a turmoil, especially with the big moves and the gaps and all that sort of thing going on, and the adjustments to the price caused by international events, supply and demand, geopolitics, and you name it. There are all sorts of influences which affect this particular commodity in very strange ways. Of course, that's why they call it, one of the reasons at least, why they call it the Widowmaker. Well, I hope you found that useful. It's been a bit of a messy old video again today, and I don't feel quite myself when I'm doing it in this environment because it's echoing and it's annoying and there's a dog next to me and there's traffic outside and I'm trying to sip on my Coke and just been down to the beach and all that sort of thing, and I've got a bit of sand on my feet, so it's not quite as peaceful and relaxed as I would like. Incidentally, whilst we're on this chart, we've been short soya. You'll have seen perhaps my videos and tweets on soya. We've been selling soya since the top here at 1520, 1550. We saw a fantastic move down, upon which we took profit yesterday. And we're also short sugar for those of you who trade sugar and soya and other commodities, grains and softs and so on and so on. We've talked about oil. Oil is a buy. If you want to buy oil, wait for a dip down. We've still got a bottoming pattern going on. We've just fallen back down towards 60. It could get down to 65, 64, maybe 62. Those are the levels to be looking to buy crude oil for a rally back up to the underside of this channel right here. So perhaps wait for 65, 64, 62, stops below $60 on crude oil. Well, I hope you found all of that really useful. It's Friday afternoon, so for me it is anyway. It's Friday morning for those in the US, and the market and the trading frenzy is about to begin for Friday. I think it could be another free fall Friday. If you enjoyed this video, please press the like button. And if you enjoy this sort of content overall, why not subscribe to the channel? I think you'll find it useful, and it also helps support the channel. Thanks so much.